The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 5th fabulous Friday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, and I do mean the easiest way, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Hey, today, you and I, we get to go look at the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon on this fabulous February the 5th. I want you to know that I'm absolutely grateful for your presence, but more so, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044. Of course, by email, steve@tfnn.com. And, of course, inside the Tiger's Den, just keep pinging me. I just have a small little window, so sometimes you might put something in there, and because of other messages that get posted, I just don't see it. Or go back and take a look at it. So always just re-ping me, because I do want to get to anything it is that you want to take a look at. So let's get this party started out here on this fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading off 170 points at 16,245. You've got the S&P 500 down 27 points at 1887. NASDAQ Composite off 113, trading at 43.96. Russell is off 18 points. Gold is flat. Light sweet crude is up 11 pennies. Silver is down a nickel, so that's flat out here. Leading the charge to the upside, we've got Post Holdings up 12%, up $7. You've got Tyson Foods up $5. Allergan up 4 to the downside. Holy shnikes. No, it's not Nike. It's LinkedIn. LinkedIn trading all the way back to its IPO week out there. It's trading at $112, down 80 buckaroonies out here. Priceline off $42. Tableau Software down 48% off 40. Amazon down $29. So, and I've got a number of requests thus far, so that's a good thing. And I will get to everything. Let's start off with the general markets. What is going on here? I posted inside the Tiger's Den, just as we were coming onto the air, one question. Let's identify where the battlegrounds are out here. And you and I get to take a look at it, different time frames. And what I had noticed was, where's that chart here? We're going to take a look at the NASDAQ. To me, today, it's all about the NASDAQ. The NQ is where you and I will get any kind of message here. Now, if you're watching this on Tiger TV, and by God, I hope that you are out there. If we take a look at, the page that we're looking at right now is the NASDAQ futures contract. 4 panels, 4 different time frames. The upper left-hand panel is the daily. The upper right-hand panel is the 5-hour chart. Lower left is the 120-minute time frame. Lower right is the 30-minute time frame. And we have all the different market profiles, really cool levels, kind of hidden levels. We don't hide them because we bring them out to you. That help us identify the battleground, support volume on the different time frames out there. In fact, it's one of the tools that John Logan and his group have been so kind to allow me. They've built something special that I'm going to be able to provide to everybody that is attending next week's workshop on Thursday. Free access to these profiles on the Ninja Trader platform, which is free, and you can't get that anywhere else. He's not even making that offer anywhere else out there. So, go to the homepage of TFNN.com during the commercial and go ahead and sign up for that workshop. But what I noticed here on the 30-minute time frame is I was taking a look at where are the market profiles right now. And what's really cool is this really helps us to understand. If you take a look at the little data box on my center right-hand portion of the screen, you can see that the bottom of the box and the point of control, both the same number out there. 4042.45. That should be a strong level of support. It is absolutely right now getting, the battle. You can see the battleground is on out there. Now, this candle session that we're in has 19 minutes to go, maybe a little bit less than 21. 19. I know that I can add out there. I got my CPA, I got my cut, paste, and assemble certificate hanging somewhere, and so I know that I know I can add and subtract. So we've got 19 minutes to go to see whether or not this level can hold 4042. Ideally, what you and I want to see out here is we actually want to see during this, well, look, it doesn't have to be during this 30-minute session. It could be the next one. It could be the one after that. But ideally, what you and I will see is some type of real concerted effort by the Bears. One last push. Why do we want that one last push? Because what that will do is that will get us to a seventh wave to the downside. Another fantastic, fabulous, unbelievable tool that I'm going to make available to you for the next 30 days that you can also use on Ninja Trader. And so, and if you're not familiar with that tool, maybe you are a Chapman Wave aficionado, then you want this tool because I can change it. I'll show you how to change it from numbers to characters out there. And yes, I really am a CPA in Florida and in Michigan. And if we got my CPA certificate, the actual certificate by the age of 21 out there. So you can say I've been a bean counter for a lot of time. In any event, if we take a look at this, we're looking for a potential push to get us to that nice little seventh wave move. Maybe it gets the price down to 4021. I'd like to see a big push down and then pop back up above that level of support out there, which would indicate to you and I potential bottoming pattern out here. The market is still trying to form a bottom. We're going to go take a look and try to figure out how. Now, these patterns don't always play out, but it's like having a big fishing hole and knowing exactly where to look and what to anticipate. And that way, you know, doing what you know, knowing what you do, to do two totally different things out there. And the whole intention behind pattern recognition, what people call catching a falling knife, is looking for patterns out there that give you and I the edge. That's what it's all about. That's what next Thursday is really all about out there. So we want to watch this level here of 4042.45, and if it breaks below that, we can go try to figure out, you know, different. And also take a look at the upper left-hand panel. That's our daily NQ contract out here, and both the weekly and the daily bottom of the box, now that should be support as well, is under attack. So ideally today, if the NASDAQ, and it is all about the NASDAQ, is going to, you know, thrust its big guns out there, then what it's got to do is it's got to close above 4057.57 out there. That's what it's got to do. That is the bottom of the weekly box. You violate that, and well, what it says is you'll go down and at least test that low from a couple weeks ago of 39.8350. Maybe even just simply blow it apart. I don't know. But that's what would be its message. And so what's interesting to me is during this market carnage out here is what's really going on with advancing and declining issues. And the NASDAQ composite isn't that far below its zero line, where it is that the bears would really be in control of the markets. It doesn't take but probably about 40, 50 issues maybe for that thing to get above zero. And the New York Stock Exchange nowhere near below zero out there. Something to think about. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You've got the Dow off 180, S&P down 28, and that's a new one for me. Our man, Mr. Bill in the Den, said that the letters CPA stand for continuously padding accounts out there. I had not heard that one, so I'll have to try to keep that in my repertoire out there. But let's go take a look at the numbers, and that's really what that's why I love this game. Actually, I don't know about you. I'm not really a big gamer. So to speak. I mean, some games I enjoy playing, but or even like I am a person. I've never once in my life sat down with a puzzle. Big puzzle. You go out, put it down on a coffee table and sit there and actually go ahead and complete it. Never done that. Yet when it comes to the puzzle of these markets and take a look at all the different tools that we need to use in our arsenal. Yeah, I mean, just think about it. If you're going to go build something, do you want to have a nice big old toolbox with a lot of good tools in there, or do you just want one tool? That's why when you and I take a look at the charts, we just simply start to navigate and utilize a number of different tools because they can really assist us in building a better view of what the markets are actually doing out there. So for somebody that doesn't really care much for those kinds of puzzles, this is like I'm immersed in this. This is like the Rubik's Cube. It's why what's cool is I haven't done a workshop for you folks for well over a year. If we're going to do it, we're going to do it. So we're doing it. And I'm going to give you access to extraordinary tools. I'm going to teach you how to use them. I'm going to teach you how to fish. You're going to, and everybody, if you've been a subscriber to Mastering Probability, you get access to this workshop if you'd like. It would be hard for me to understand. Well, if you're a person that's trying to grow, and I think that includes all of us. I know it includes everybody here, because the only reason that we congregate amongst each other is to get ideas and to learn from each other. I mean, there's one thing that is unique about everybody here at TFNN, and each of us have 6, 7 human needs out there. The one thing that we all meet by being here when we get together is that need for growth. I mean, we have that in common. For many of us, that need for growth and or contribution happen to be our number 1 and number 2 needs out here. And that is really the beautiful thing that really connects us. It's nice to be able to have that kind of synergy. That's what Thursday is going to be all about. Now, the question that came in just before we went on the air by our man John in Sarasota He's also from other places. He said, what do you see in your crystal ball, please? But that's with regard to Nugget, N-U-G-T. And so I can say, many of you know, that subscribers and myself had Nugget. Let's go take a look at N-U-G-T right now. And we had that trade. We got in that trade virtually at the bottom. Not the bottom tick, but pretty darn close on January 20th. That's right here. We got into that trade in the $18-ish range out there. And we wrote it out to yesterday. Yesterday, we went ahead and cashed in, totally cashed in, and took a 92% profit out here. So today, we can see that Nugget is trading above yesterday's high. Let's just let's go take a look at the volume. So I can feel at this stage here, and I like that trade, at this stage here, I can come to it from somewhat impartial. Because, now it's as if I'd have to justify why did we exit. Well, I'm going to go show you some of the reasons why we actually exited that trade out there. And it all depends upon, where it is that you got in. Volume today, not too shabby. You've got 8 million shares. Yesterday was 13 million shares. We've been trading for, about 3 hours out here? 5, 9, 3, 10, 12, 4 hours. See how that CPA comes in handy? Because when you can count on your abacus, right? You and I, we've got an abacus. It's right here. It happens to be our digits, our fingers out here. It's a pretty cool thing. So you got pretty nice volume inside of NUGT. But I suspect where everybody is trying to get in on this side of the boat here, that it's getting ready to tip. And it may not be today, and it may not be tomorrow. In fact, I can assure you it won't be tomorrow or Sunday. I can't assure you about Sunday, but I can assure you about Saturday. It's a day off when we come to trading out here. But I'd be very careful. I would be very, very careful out here. Why? Why would you be careful, Steve? Well, let's take a look at a couple of things here inside of Nugget. Let's first take a look at this chart that is on my screen out here. And this takes a look at, now instead of the Nugget, we're just taking a look at the GDX, the Market Vectors Gold Miner ETF out here. That way, we're just looking at a non-leveraged vehicle. In the center panel, that's the top panel. The center panel, that is the continuous contract for gold. The bottom panel, I've just gone ahead and put the U.S. dollar index up here. As many people have the belief, and to a certain extent rightfully so, that the inverse direction of the U.S. dollar is going to impact the movement of gold. Of course, you and I know that it's a directional thing at best, and it doesn't always do the tango. In fact, oftentimes it's a really bad dancer. But with regard to the GDX and the gold contract, that's a really good dance team out there, and so you want to be paying attention to what's going on there. But for those of you, now you can see those trend lines that are on my chart out here. And by the way, the bottom chart here, the U.S. dollar index, I just simply inverted it so that it would match the dance steps, meaning that a weaker dollar is actually rising, because then you would expect to see gold rising, the gold miners rising out there. And that way it makes it a little bit easier for you and I to take a look at. So for those of you that believe in the U.S. dollar and its directional correlation to gold out there, if that's what you're hanging your hat on, then be careful. Because there's a long-term trend line, that little red trend line that goes back to 2014. So a couple years ago, about October 2014, and you can see that prices bumped its head right up against that. Now, it might be able to blow through there, but right now, it's a trend line that is resistance. Inside of the GDX, today, yesterday it did not, but today it has actually just kind of punched through its trend line. Now, it's a different trend line start date. We're back in the January 2015 timeframe out here. But whereas gold did punch through its trend line, oftentimes what occurs, I thought we would see that today. Hey, we still may see that today. What you want to see if you're bullish, the GDX, if you are bullish gold, you want to see price, now that the trend line has been broken, you want to see price come back, test it, and reject it and stay above that other area. Otherwise, you've got a false break. We don't have that here just yet. But it is, I think it's really important to be careful. Now, let's take a look at those three charts. With regard to the Nugget specifically, what I do is take a look at the top 9 holdings here, because it just looks so pretty on this chart. If I put 10 in here, it just doesn't fit well inside the signal platform. But I can take a look at the top 9 holdings, represent over 50%, and get a feel for what's really going on, 50% of the ETF. In the case of number 1 weighting, it's very close to completing its measured move. It's breakout consolidation pattern. So it could run up to even as high as 1203. It could run up to 1173, or the move may be be over. But look, there was a big gap down here with on May 26th, and that is resistance. That's right, really at about that 1203 level. So it's getting pretty close to saying, hey, I'm tired. I need to take a break. It's been one heck of a run over the course of the last 12 or so trading sessions out here. If we take a look at Newmont Mining, number 2, it's got more room to run from its consolidation breakout. It could easily make a move to $25 out here, but it's stalling today. That stalled, not a bearish reversal or anything along those lines. Gold Corp broke through its trend line with conviction. Wide-ranging bar. Even though you don't see it, it's a gap. But, folks, that's a wide-ranging bar with good volume behind it. But you like to see it come back and test its trend line. I'd like to see it because that could be the next entry point into Gold Corp at least. When we come back, we'll take a look at a couple others. My point is this. Just make sure you adjust your stops in your nugget trade out there. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Dow's off 174, S&P is off 27. So one last thing, really, if you're in any trade, nugget trade, or anything along those lines, you know, what you want to do, the last thing I said was just make sure you're adjusting your stop. So how do you do that? Well, you know, here's the issue. Here's the issues you've got to contend with, it specifically inside of the nugget trade. You know, a logical area would be your TAS market profile, your weekly profile out here, but you don't want to give up that kind of a gain because the top of that box is 2870. You're trading at 38.58. I would not want to give that up. So the other thing you can do, and anybody who attends the workshop next Thursday night, part of the goodie bag out here, and it's a lot of things. If we just simply take, this is a position size calculator, that's on your members page. What's nice about this, it's one click away. You put in the symbol, you click on it, and what it does is it comes back and it gives us what our average true range is out here. It's supposed to do that. Must be data 275. There we go. I was the drum roll Johnny thing. I forgot. So what I can tell you is over the course of the last 10 trading sessions, Nugget has moved an average of $2.75. So your stop should be 275, maybe 275 times 1.272, 1.618. That way you get an expansion out of it. That way you keep it out of, if you're trying to stay in the trade, you keep it out of the daily range out there. So that's what I would do. I would do some derivative of that. Boy, does that sound technical and juicy or what? But that's what I would do. Let the market go ahead and take you out of that trade out there. Okay, so that's for gold, that's for Nugget, and there's like 3 or 4 other reasons I could give you to say you got to be cautious out here. If you're only going to use one tool, then you're only going to see one thing. I promise you that. But if you use multiple tools, then it helps you to be able to build both the bullish and the bearish case out here. Let's go build some additional cases for the market, right? We took a look at the NQ. We know where the line in the sand is. We know about the 7th wave that we've got to the downside. If we take a look at the daily chart, by the way, of the NQ out here, what are we going to notice? We're going to notice that, even if the NQ pushes down below the low out here of January 20th, and I could give you lots of reasons why someone would say that might be curtains. I would say, what the heck are you talking about? What's that kid's name out there? What the heck are you talking about, from that show from, 30, 40 years ago? Lewis? No, it wasn't Lewis, was it? But in any event out here, here's what I can tell you. Not that good with shows out there, either TV shows. But what would happen is you would actually get a 7th wave move to the downside. The exact same hook and ladder treatment out there that gave you the top out here on December the 2nd. Willis, there you go. And if we take a look at it, so even if those lows get taken out and you somehow have convinced yourself that it's curtains, that's it, walk that back just a moment, because in the same kind of pattern, right? Take a look at here. You made a 6th wave inside of the, if we just flip this chart around, okay, because in essence that's what we're doing when we take a look at the current segment. But look at how the top was formed inside of the NQ on the daily basis. Back on November 4th, right? On November 4th, you got to wave number 6. You had a little price relative strength divergent pattern. And then you saw, a fairly decent move to the downside. And then what? A move all the way back up. It actually made an intra-session high. Well, why is that any different than this 6th wave here? A little price relative strength divergent pattern. And the mere fact that he had a nice little bounce. And then what? This could have been about a 0.382 retracement as well, just as this one. And then you could have one more move to the downside, give you a wave number 7. And all of that just really coming back into the August 2015 lows to test that. So be careful out here, because if the top formed with that style of pattern, what would make anyone believe that the bottom couldn't form the same way out here? So the NQ is, it's going to be important for us to watch. We're going to get plenty of signals from it on. We're just going to get plenty of signals from the NQ out here. Not to make the entire show about it, but it is where we really should focus. Let's go take a look at. And if I look at the ES Mini as just as an example, here's our same 4 time frames out here, and I put the 30-minute chart up. I got this is going to show us both the 30 and the 60-minute time frames. You can see how right now, this says that there's some really good stiff resistance up at around the 1889-ish area, 1888. That means it would have to get through 1885 out here. But this one is set up more. The snipers are hanging out right here at 1888. And that's going to be an area to watch. You've got from the offensive line, the defensive line. The defensive line right now is camped out at the 1877-ish mark, and the offensive line, well, they're the ones that are camping out right here at the 1889 area. That's inside the 30-minute chart, and its market profile is set up more from a bearish position, unlike the NQ. But I think it's the NQ is the one that we want to be paying attention to. Okay. Enough of that out there. Let's go take a look at what do we want to take a look at next. as if I had this planned. And I don't have any other questions. I don't think there's any questions inside the Tiger's Den. Let's go take a look at the IWM. There you go. So let's go take a look at the IWM. Let's go take a look at the IWM by maybe stepping through it. Let's take a look at the Russell 2000 futures contract out here. Russell 2000 futures contract, you know, it's got bullish style formation out here. Even a push lower below the low of January 20th gets us to a 7th wave move to the downside out here. So you can't exactly count it out. That's on the daily chart. Do I see any? I see that looks more bullish than bearish to me. When I say bullish, I'm referring to bottomish. Okay, that's really what I'm talking about there. The 5-hour chart, not a whole lot of information out here. Sideways move is really all that we're taking a look at out here. Nice two-way trading market is what that's communicating. 2-hour chart out here. Let's go see what it's communicating. Well, the 2-hour chart, interestingly enough, from the high out here at about 6 o'clock in the evening on, what day is that? Looks like January 31st or the 29th. I can't tell which is which. Come on, try one more time. The 29th of January. You know, another push down here below the low at 12 noon's candle on February 3rd gets us to wave number 7. So that's what I see there. Boy, wouldn't it be interesting to see that 2-hour chart line up with the NQ's 30-minute chart out there. Let's go take a look at the IWM specific, try to rip that apart, see what its message is. Here's what we know. Let's try this on multiple time frames. Let's first pull up a monthly chart for IWM. And here's let's go take a look at the good news and the bad news. So the bad news inside the IWM, let's go ahead and make that compact. There we go. The bad news inside of the IWM is that it has broken through from a monthly standpoint, and the month that we're in right now, early part of it, has broken through its rising trend line. That's the trend line going back to 2009. When you break that, it's usually not, it is not a good thing. It's an indication that you're moving down. Now, there's an A to B equals CD to the downside that it's completed on a monthly chart, but it has not given us any kind of bullish reversal signal. So, you know, what this says to me at this stage of the game, until you get back inside the trend line, you know, you're bouncing here. Maybe you go back and you test that trend line, which is what it already has done during the month of February, and it's rejected that level. It says that it wants lower price. Lower price inside the IWM eventually says next level's 91.92. And then gets down to about 84.27, which is back to the highs, I believe, from 2007 out here. That's the monthly. You get back from this break. Let's go look at the weekly, the daily, and anything else that you'd like. Steve Rhodes with TFNN. Dow's off 197, S&P down 31 points. Be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We were taking a look at the Russell 2000 IWM. We've got the weekly chart up on my screen right now. And the weekly chart shows that, this completed a nice by the D point. I made the 1-to-1 A to B equals CD. That's something else that I'm going to be teaching you next Wednesday, how to master that C to D leg. It's going to be like a master trader course. So I really put the value together of what it is that we're going to be offering on next Thursday. You'd say I'm a really poor negotiator, because you're going to get thousands of dollars worth of training education. Look, when I do something, I do it. I put everything into it. Otherwise, why even waste your time, right? Doing things half-baked, other than a pizza that you go pick up, from a pizza joint, so you can come back and you can have it nice and warm and you bake it in your oven. That's the only half-baked thing that you should ever do in life out there. Many of you probably don't even do that. You should do that. Get a half-baked pizza. That way you always have it warm and crispy. Just a little Stevie trick out there. Not so much a Stevie trick, but you got a nice little hammer candle out here that formed a couple of weeks ago. And until that low gets taken out, you've got a bottoming-ish type pattern out here. And that low, by the way, 95.06. You get below that, and you're taking a look at, run down to 85.71. 91.95 out there. That's what the weekly. The daily chart out here, and that's what, so some of the lines are going across my screen. The daily chart shows the most current swing point from January 20th with the 94 million shares. We're trading inside it, but all the volume is basically been light. But when you trade inside a swing point, when you close inside it, 100.33 is the number, volume or not, says you can go test the low. So at this stage here, it would say to me, until you close above that 100.33, you can anticipate 95.06 out there. And then the last piece of evidence that we'll take a look at with regard to the IWM for levels of potential support out here, this is really by looking at the Russell 2000. Here's our weekly horizontal trading ranges, and that shows us that 948 area is an important level of support, which basically gets back to the low of a couple of weeks ago. You close below 948, and you're looking at a run back to 831. So it really says you get back to the 2007, 2011 highs out there, and that's what the IWM would be saying. So it looks like if I go over and take a look at the NQ on the 30-minute basis, we should be now down into that seventh wave. That's a beautiful thing, right? If we take a look at, thank you, Peak D. If we take a look at that, so here's the chart that we were looking at, right? And so you and I were going fishing. The question is, are we going fishing for dynamite? What are we going fishing for out here? Well, we're going fishing to see if there's a bottom that's forming. Now, price has been moving down. We've got 15 minutes left in this session here. Price has been moving down inside the NQ with less relative weakness out here. That's why you see a little bit of this little dark line going across my screen. You got a 1 to 1.2728 to B equals CD that is forming out here. We've got those market profiles to pay attention to. This doesn't mean that, in fact, until you see the bulls come in, you've got to wait for the cavalry. You don't have to, but why wouldn't you? The market's responsibility to you and to me and to everyone is just simply to give us messages. They're not smoke signs. They're not invisible. They're really just sitting right out there. It's just sometimes we're a little bit antsy, you know, and being antsy, you know, acting early doesn't usually work out real well. I mean, just anticipate, use stops, things of that sort, and makes it a whole lot easier out there. So far, the market's doing what we were anticipating as we came on the air for a potential bottom. We'll see how it is at the end of the day. Look, the market, when you're in that seventh wave, you can just keep going lower and lower and lower each half hour out here, and that could be an outcome that we've got. But we've looked at a couple daily charts, a couple weekly charts, so we've got a pretty good grip on what's going on out here. I mentioned the New York Stock Exchange. I think I mentioned it. So the wider swath of the market, we'll take a look at two wider swaths of the market, see what their message is to you and I. And New York Stock Exchange, still the advanced decline oscillator is above zero. The wider swath is not exactly saying that it's given up the ghost. It just isn't. There's still an A to B equals CD to the upside inside the New York Stock Exchange. Its price oscillator is still above zero. The reading is 61.29. So, not that it can't get below zero. It can. Oh, I see I've got a new message here. It says, from Dan, he says, Steve, loving your newsletter. Well, I like that. Very clear, concise, like your show. I sold my GLD options for a nice double, but I still have SLV March calls, 15 buckaroonies. How is the gold move going to affect the ability for SLV to move higher? Looking for SLV 1491 as the target. So let's go take a look at that for a wonderful subscriber to Mastering Probability. So let's go take a look at the SLV silver. Let's get a feel for what's going on here. Silver, by the way, is back 8 pennies, so it's in essence flat today. If we take a look at the SLV, let's go ahead and get rid of this A to B equals CD because that certainly is not out here, and get a feel for what the, so first thing, when you pull up a chart for SLV, you're going to see all these gaps out here. Basically, throw those gaps away. They mean diddly. They mean nothing because the underlying instrument for SLV is what? It's the silver contract. So really, we've got to go over and take a look at the silver contract to get a feel for what's going on there. But still, Dan is looking at 1491. Let's just simply look at retracements from the high down to the low out here and see where that would give what price projection. That would be the 0.618 price projection takes us to 1463, and you're looking for a target of 1491. 1491, which is the swing point out here, basically from October 28th. The low of which is 1526. That's what your target is out here, and you're going to have to really see some giddy up and go in order for that to occur. If I am wrong, and I could be dead wrong here, that the metals are getting ready to take a breather. And that breather could turn into something more than a breather. But in the case of gold, I gave a number to subscribers this morning where you would turn all out bearish on gold. That is a possibility. We're not anywhere near that just yet. It's probably like about 20, 25 bucks below that number. Again, if I'm wrong here, silver's got to get some giddy up and go. SLV. Let's go take a look at the silver contract. Let's put some market profiles on there and see what it is that we can see here. Silver has been weaker than gold, and let's go ahead and put our market profiles out here. Get a feel for any message out there. So the daily and the weekly. Okay, so in the case of silver, the silver contract, what I would say, Dan, what you want to be paying attention to, assuming silver's going to continue to move higher. Assume I'm wrong, metals are going to move higher. $15.14 appears to be where you're going to run into some really significant turbulence. I mean, expect that the oxygen mask could actually fall down there. Why? Because that happens to be the bottom of our current TAS weekly profile out here. Now, if the oxygen mass doesn't come down and you just get to 15.14 and you get above that, that will bode well for your trade out there. That would actually say silver could move to $15.56 out here. But silver is likely not going to move in the opposite direction of gold. I just say you just got to be careful out here with this trade. I would just be careful. This subscriber knows the many reasons that we got into the trade in nugget in gold, which we waited patiently for, and look, we got near the bottom, and also knows the reasons why we went ahead and exited yesterday in that trade. That doesn't mean that there's not more to come, but we got the big old fat fillet. We got the surf and turf when you take a look at that trade. And for me, it's time to step aside. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 235. S&P is down 35 points. Before I came on the air, I was watching one of the financial stations, and there was somebody on, a professional, so to speak, and this person was describing, with regard to managing money, how being in cash was not an investment. Was not wasn't this about trading? It was not an investment. That was absolutely the wrong thing to do. I wanted to put my hand. I got a 3D TV. I wanted to be able to, in 3D, put my hand through there and tap her on the shoulders and just say, "You thought I was going to wring her neck." I just wanted to tap her on my shoulders and say, I am one of the representatives of the Tiger Nation out here. Give us your cash, and we'll go with your philosophy, and we'll give you back 25% less, a couple weeks from now, and see how you feel out there. Cash, folks, is a investment out there. It totally is an investment out there. And this person was applauded as being a technician. You talk about sometimes taking that 2x4 out. Things happen for us. Well, the for us was, don't. Really, you got to be kidding me. Hey, let me show you with regard to things that happen for us out here. Here's in this workshop that we've got coming up on Thursday, and I know I'm going to see all of you there. And even if you can't be there, don't worry, because it's archived. There's really three tools I'm going to provide to you. I'm going to teach you how to use them. I'm going to show you how to put them on a chart so that you can have access to them. This happens to be a 10-minute chart out here. And those three tools being our TAS market profiles, so they're going to work on any time frame. This happens to be the 10-minute chart. I'm going to even show you how for 2 weeks you get access to the CME live futures data if you want to trade intraday without any cost to you out here. The cost is your time to just simply go ahead and do what you need to do out here. But see how these market profiles here, see how they continue to form. And in this case here, just look at the bottom of the box. You can look at the top two, but look at how the bottoms of these boxes, support levels, continue to form at lower lows out here. It's just another clear sign visually of who is in charge. It also helps you with regard to where your stops ought to be. Your stops ought to be a close above the resistance level out here. In this case here, take a look at, this is right here at about 1240. You would have, if you were short, you could have taken a stop inside that trade. Here's, that's one of the tools, right? Another one of those tools is just simply going to be our ability to use the wave count to the downside. Look what happened when you got down here at 1130, right? Price stop, you got to a 7th wave. We then saw a bounce higher up into a 10-minute profile. Another 10-minute profile also told you that sellers were the ones that were in control. I always like to use a confirmation of any kind of pattern out there, and a confirmation is one more ping, Vasily. What movie did that come from? Yeah, one more candle, just to confirm that the move that you're seeing really has conviction behind it. In this case here, you didn't. But each of you have your own trading style out here. So we're just simply and look, if you are a Chapman wave aficionado, then you want to come over here so that you can incorporate this with all of Basil's work. I can't teach you that, but he can teach you that. And this just becomes an easy way for you to be able to go ahead and get those wave counts in there. So, and then you've got your A to B equals CD tool. And I don't know of anybody better to be able to teach you how to master that tool and that C to D leg out there. So come on over, homepage at TFNN.com, sign up. All plenty of other goodies inside that bag. I may even teach you about the best ways to, and the best styles and the best brands, or at least the ones that are available to you, of cold sakis out there. And I know, you get a lot of people that say, nah, I don't drink sake. It's just because you've never had sake with Steve. So, folks, it is Friday. No matter what it is you're doing out there, have a great Super Bowl weekend. Have a great weekend. And I look forward to seeing you on Magnificent, Marvelous Monday. And take care. Sayonara.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.